Welcome back to another episode of Cryptonomics. As always, I'm your host, Mark Eckerle. Today, we're diving into a company that's redefining how people approach financial literacy and empowerment with the company UglyCash. Joining us today is Luis Romero, the CFO, who's been with UglyCash for about 2.5 years now, leading the financial operations and is a key voice behind the company's mission to make finance more accessible and inclusive. We have a bunch of topics to get into today, but thanks for joining the program today, Luis.
Thank you, Mark. Happy to be here. Thanks for the invitation.
Awesome. So what problems, diving into UglyCash and the company, are you guys looking to solve? What makes you guys unique in the marketplace as opposed to the traditional financial services companies out there, the other fintech companies? What makes UglyCash unique and a differentiator in the marketplace?
Yeah, the very beginning of it and the core of it actually has to do with the purpose that we have behind everything we do. And so the main core problem that we're trying to solve is wealth inequality and everything that surrounds it. And as we know, like the current world is as equal as it has ever been, where top 1-2% of the richest people hold 50% of the wealth, and vice versa. The bottom 50% hold only 1-2%. So it's completely inverted, and it's only increasing, and that creates all sorts of problems, and obvious problems like social polarization, mass migrations, and we believe that needs to be fixed in different ways. There are two core pieces to it, though. One is that we live in an inflationary monetary policy global economy where, as we know, every central bank is continuously expanding money supply at a much faster rate than productivity, which creates currency debasement, essentially, and that produces inflation everywhere. This is true for all currencies. Obviously, you have hyperinflation currencies, but it's an interesting fact that since 1971, when the fiat standard started, there has not been any single currency that has not been below 2% inflation rate on an annual basis. And what that means is that since then to date, if you have a 2% inflation rate, may not sound as too high, but if you compound it over time to date, that means that people would lose 2/3 of their purchasing power over that period of time. That is significant. You have 70% of countries with more than 5% inflation rates, and a third of countries with more than 10% inflation rates, double-digit inflation rate. That erodes, like in a matter of 10, 15 years, 50% of the value basically is eroded if you have only 5% inflation rate. So it's one of those things that, this so-called frog boiling syndrome thing that people don't really realize at the moment, but over time, it does bring a significant consequence. By the time you realize it, it's already too late. It's one of those things. And this is true for every currency, just the US dollar, obviously, the global most strongest currency asset since the creation of the Fed 13, it has lost more than 95% of its value to date. And it's just continuing expanding. As we know, global fiscal deficits mean that there's a continuous expansion of debt, and that debases currency. So that's a big problem that we're recognizing and we're trying to solve. The second one that is connected to it is that there's unequal financial access, meaning a good part of the adult population is unbanked or underserved, especially in the emerging markets or developing countries. And that creates a problem when seen in conjunction with the first problem of inflation, because that creates what economists call the Cantillon effect, which means that people or corporations are closer to the new money creation benefit first from it in the form of credit and other, and they deploy that into the economy that raises prices, and then the working class later on pays for that cost, let's say in the form of inflation or higher prices. In reality, inflation doesn't affect everyone at the same time, it affects more the lower part of the pyramid. And that is precisely what creates a widening of the wealth gap. The rich just get richer, the poor just get poorer as we continue to expand the money supply. And that doesn't seem to be changing anytime soon. As we know, fiscal deficits are everywhere. Governments are going to continue to print money. And so that's a problem, a systemic problem that is eroding people's purchasing power, and it's creating society decay everywhere. So that's what we're trying to tackle by providing equal economic opportunity to everyone, to truly empower people everywhere, and with the use of technology that we can explain. But that's the main problem that we are trying to solve for.
And I think it's, to your point, something that isn't new, but I think we've felt here, particularly in the United States, a finer tuned focus on this just based on the harsh reality of the last 5 years, where we've seen such a dramatic hit on purchasing power across the nation and just buying simple, basic goods and groceries and things like that. It's, again, nothing new, but I feel like it's just hitting home a lot harder the last couple years. And obviously other countries have felt it before this time here in the United States. Obviously, it's not, again, like you said, not a new problem. I'm curious if there is a particular market. Obviously, it's every currency, like you mentioned, right? This isn't a specific to the US dollar, specific to one particular currency. Is there one market that you guys are looking to tackle first, or see a bigger problem where you see a more advantageous state to kind of disperse your product in, or are you guys just going global and tackling wherever you can to solve as many problems? I'm just
Yeah, totally. No, you're right. Like, this is something true pretty much everywhere, but in different levels. And
Mhm.
for sure, like, we pretty much see the world in the global north and the global south. Maybe it's a generalization, but it's useful in the sense that typically, yes, US, Europe, Japan, etc., are relatively stable, even though precisely over the last few years, especially with the pandemic and all of the acceleration of the expansion of the debt, it's all of a sudden a little bit more visible to people, to millions of people that for decades really didn't care much about it or didn't really think it's a
the word I was looking
problem.
for. It's visible. That's
Exactly.
perfect. Yes.
Whereas in the global south, or more traditional, emerging economies, developing countries, it's a lot more visible and people are a lot more conscious about it. And you have extreme cases. And which are those? For us, everything actually started in Venezuela, 18. Venezuela's inflation reached 1.7 million% hyperinflation. That's crazy. I mean, economics textbooks always talked about quote unquote hyperinflation being triple digit inflation, which is already huge. Actually, even high double digit inflation is already considered hyperinflation in some senses. But 1.7 million% in 1 year is just, it's just incredibly
Can't fathom that.
crazy, right? And you and I can, yeah, mention that number here in the podcast, and that's all. It's a concept in our minds, right? But there's millions of people that have lived through that. And I'm married to a Venezuelan. I'm close to the actual problem for millions of people that really had to, the bolivars that you were holding at the start of the day were worth half of it by the end of the day. So literally people would run to try to buy something with the little that they had. And obviously you have supermarkets running out of products because people, like, that creates all sorts of distortions in consumption patterns and economy. It's just crazy, right? And you have it exacerbated with the fact that they had capital controls, so people couldn't exchange bolivars for dollars legally at their will. So that would be kind of like an example of an extreme case where this is very, very visible and has, literally eroded millions of people's, hard-earned wealth, regardless of that being high or low. It's just they can't sustain their value, and that becomes a real problem. And this is true in other places. Obviously, Argentina, we're present currently in around 50 countries worldwide. Most of the focus has been in Latin America. Everything from Venezuela. Well, Venezuela is a separate story. We have very punctual participation there, but places like Argentina, Colombia, Peru, you have Central America, Guatemala, El Salvador, Honduras, Mexico for sure. We are also expanding to Africa, Nigeria, you have like different places, and also in Asia. So in short, like the global south, it's kind of like the place where we're seeing there's a clear need for people trying to reach more stable currency, and that is a game changer.
Yeah. And that's the biggest use case, right? So it's easy to, that's where you'd want to start, right? Where it could be needed right away. Now, you touched on it earlier briefly, the underlying technology, right? Overall, because I know, right, personally, when it comes to transacting with stable coins or anything in the digital economy, sometimes it seems seamless. But when you add in stable coins or digital assets, it gets a little unknown. So can you walk us through kind of what the unique technology that you guys have that makes you separate from other fintechs out there?
Yeah, sure, absolutely. So I'll think of it in two pieces. One is kind of like the foundational piece, which is we operate in crypto rails first. We're a native crypto fintech app. And so that first piece is very important because that's kind of like if you zoom out and see the general progression between, traditional banking for decades, if not hundreds of years, evolving into the newer fintech neobank only over the last couple decades, really, which really made an important change in adoption and growth. But if you think about it, fintech neobanks have worked for the most part on the front end side of things, like bringing the whole bank experience into your phone, into your app. It's a great experience on the front end side of things, but on the back end, pretty much the same rails, the same technology infrastructure that has been out there for decades, and runs on COBOL and like all technologies. And it has a lot of a lot of challenges like deferred settlement and a lot of friction, a lot of things. And that's where crypto rails come in, right? And it completely changes the picture where you get the best of both worlds. You get the beauty and the experience of the neobank in a mobile app you can take with you everywhere, but you're running on modern distributor ledger technology that makes a complete difference. Now we're seeing truly a 10x experience improvement in many ways. Like for the most part, first of all, you're global first. Like from day one, we as a company can serve everyone almost. There are nuances around that, but by default, you're global first versus the traditional financial system is local first. And so that's why the traditional financial system is so fragmented, because each local system plays by its own rules, has its own regulations, its own systems. And in order for integrating with other countries, you start to tap into a lot of complexities that introduce friction, cost, time, etc. So global first to start with. It creates also the possibility to do instant payments, something that you cannot do in the traditional world. You have Monday through Friday, 9 to 5 in a traditional bank. In a crypto neobank, basically operating 24/7, right? There's no time, it's instant. It's just like sending a WhatsApp message to someone in Europe. It's just instant. That is what's crypto matching, the way that the speed at which information travels. Now money can travel at that same speed. That's really a truly improvement. Then you have low cost. It's super cheap to do so. In comparison, you're talking about cents versus dollars. It makes a huge difference. You think about remittances, people that leave, every dollar counts. That makes a huge difference. And now think about companies and businesses, large amount of volume, cross-border payment volume. It does bring significant cost savings at a global scale. So that's very significant. Then it's fully transparent as well. So everything runs on chain, everything is fully verifiable. You have proof of reserves in a crypto neobank versus a fractionally reserved black box in a way. In a traditional bank, you don't know what's really in there. if they're rehypothecating or not, customer deposit, all sorts of things are possible. Not saying crypto is free from that, but at least it's transparent, and the way that if it's properly done, it's fully transparent. You can choose to transparent that to your customers, which we do. We provide proof of reserves online, everything's on chain. That's a game changer. And lastly, it provides the capacity for the user to fully own their money. Like you have self-custodial models that are possible with crypto that are not possible with fiat rails. And that's a big difference. Not necessarily everyone wants that, but the optionality is what's important here, because that keeps kind of like custodians in check, if you will, and everyone can take their funds whenever they want, anywhere. And that completely changes the picture in terms of who has the ownership of a fund. So that's, I would say that makes a big difference between apps like UglyCash and even successful neobanks that have been growing a lot. But then on top of that, we do things also somewhat differently, because there have been dozens and dozens of crypto neobanks popping up everywhere, and for good reason, right? This is actually making a change. But we're bringing some additional differentiation in things like, for instance, the stablecoin that we use is a crypto-backed stablecoin, not a fiat-backed stablecoin, and that has some interesting things. We're using from the reserve protocol a stablecoin is called EUSD, that it's collateralized with DeFi, and DeFi, it has DeFi interest yield bearing collateral
Mm-hmm.
that allows us to generate sufficient income to be able to provide an earn program that grants 8% APY to every user in UglyCash. So imagine if you're in Nigeria or in Argentina, you can scale your local currency's inflation, can go to a stable currency as a US dollar, but on top of that, you can earn 8% dollars. And so that really makes a big difference, not only to protect from inflation, but even to actually expand your wealth above inflation in dollars, or at least protect on that. So that is something that we're able to do that not every stablecoin provides. That's a differentiation. And also this stablecoin that you're using has very interesting protection mechanisms, because it's over collateralized through staking, and that provides a protection mechanism against the depegging risk, which is something important in the stablecoin world. And it's important. We've seen it in reality, as you may remember, when Silicon Valley Bank and Silvergate and Signature collapsed. The USDC actually depegged. I think it was 12% or so for a few hours. That is an important depegging that can be, disastrous if not well managed. The interesting thing about the stablecoin that we use from the reserve protocol is that it has a self-healing mechanism governed by smart contracts that, in the event of a depegging, it recollateralizes and rearranges the portfolio of the basket that backs the token in an automated way. That's very interesting. It happened literally a few months after the protocol went live in mainnet. This thing happened, and the thing that was programmed for months came into reality, was used, and it worked. And then the stablecoin was kept the peg 1-to-1 to the dollar, just flat. So it was really incredible to see. And we believe that's going to be an important thing in the future as more and more stablecoins become an important part of this. And you have the possibility to fully collateralize a token. You have the possibility to transparent that on chain, and you have, by smart contracts, the ability to protect that collateralization through this type of over collateral and then self-killing mechanisms. So that's a differentiation that we are very proud of. And also, lastly, we're also bringing to the market other differentiated products as well from the reserve protocol that are called index DTFs, which is kind of like the decentralized version of an ETF,
Mm-hmm.
where as more and more real world assets are getting tokenized, this creates the possibility to create now portfolios in terms of indices that aggregate different types of tokens into a single token. And so with that single token, people can have exposure to different categories, different ecosystems within crypto. Again, both native crypto tokens and real world assets that are starting to get tokenized. So it's a very interesting type of product that we're bringing to UglyCash users. We already have listed like, I think 4 or 5 ETFs, but more and more are popping up. And you have actually like traditional financial institutions are getting interested in this concept. You have Bloomberg have already created the Bloomberg Galaxy Crypto Index.
Hmm.
That is the DTF that we have. But you have both crypto players and others doing so, like CoinMarketCap creating the 20 index, or Coinbase 50 index, or Franklin Templeton crypto index, and all of those are now possible, and we're bringing those to our cash users. We are the only crypto neobank that is bringing those type of
I was gonna say, I
capacity.
haven't heard any other neobanks offering that. So, I mean, these various solutions just to users as well as. So, one question I want to ask: this platform, this solution, isn't just for individuals. Businesses and corporations can also be banked.
That's right. We serve both consumers, and we have UglyCash business to
Mhm.
serve businesses, and that's another part of the company that's also growing pretty well. So yes, like there's this can be used by anyone really.
Yep,
Yeah,
and that'll help kind of actually as you scale up. But the one thing, I mean, the 8% and maintaining that peg throughout a significant event, like you mentioned, the chokehold or choke point 2.0 that transpired. Um, it was a very interesting time because as an accounting firm, right, we work with a bunch of stablecoin proof of reserves and understanding, and that was something that was top of mind for us. Of this is a significant event, and how do we deliver that trust and transparency to customers on these stablecoins companies that we're working with if an event like that were to happen, right? So just disclosures and making sure that the public is aware, hey, this event happened, but in your case, we weren't affected, right? Because we prepared for events like this. I think that is a massive differentiator in the marketplace for your token and your software solution.
and it connects a little bit with the previous point of if you live in a country with low inflation, you don't really notice or care. But all of a sudden, when inflation starts to go up, then all of a sudden you start to care. Similar
Exactly.
thing happens here, right? It's like, okay, my funds are fine there in the bank. And another example of, yeah, in the global south, you have a lot of examples of bank failures and catastrophes. People are aware of it. In the US, not too much, but when things actually happen, like these bank collapses, is where when people realize, oh, that's important risk that we didn't well understood, and how to protect for that, how to mitigate that risk. It's an important thing to consider. And that's why we believe that this is something that it should be part of the stack, in our view, in terms of how stablecoins should be adopted more widely. And that's why we've worked on this. And yeah, we didn't know how long would, or it's like insurance, right? You don't know if you're gonna need it at all. Like hopefully you never do, but if you do, it's there. Well, this literally a few months after it was released, it was actually needed. And so it was a great example for us that yes, this can make an important difference, and it could be an important part of the way that this could evolve over.
It's good to see, even a couple months, even though you didn't want to use it, that it came to life and it worked, right? So good proof of concept there in the most stressful situations.
Exactly.
One topic I want to kind of pivot to a little bit is on the community front, right? Building the financial inclusion, financial literacy side. How does Ugly Cash help foster that and empower users, right? As we're making the transition and we're trying to bank the unbanked and offer these various solutions, right? How are you educating folks on what might make the most sense for them in their financial position, right? Whether it's certain investments, you mentioned the DTFs with the yield percentages, things like that. What are you guys doing for the community out there to help educate the masses?
Yeah, so this I would say is actually really, yeah, and the most important part for us, what we care the most about, precisely what we want is to empower users. And what that means is that users in order for users to actually be empowered and be able to take control of their wealth and be able to eventually reach financial freedom, it all starts with access, and it requires information, right? And the tools to be able to do that. And so it's a combination of important things that are not are much more easy said than done. And the reason is because when it comes to making a true impact in the community at scale, you require not only a very good product. You can have the best product in the world, but if you don't have a good distribution model that allows you to connect with hundreds of thousands, if not millions, and eventually billions of people, it's just really very important, very difficult to actually make a meaningful impact. And so the way the way we look at this is very interesting. And this is something that Gab, our CEO, is very passionate about, which is that especially right now, as the AI proliferation is going through, foundational things are changing in the way that how value behaves, meaning that like AI, all of a sudden anyone can create a lot of information and just real high quality information and content out there. It's just flooding everything in social media with artificial intelligence created content for the one on the one side, and on the other, just building an app, building a fintech app. It's just literally now possible with AI coding just in a few days. So what type of impact or implications that bring to make a true change? And we believe that in that world, there's two things that we've been thinking about. One is this concept of, in this new AI world, attention is the new currency and authenticity is the new scarce asset. And those are the things that we care about the most now, that we believe are important to really connect and engage with users and help them get empowered and know what to do, because they're going to be flooded with everything. And so what we're doing is that this is among other things the reason why we're called UglyCash. Like, starting with the name, right? It's like UglyCash. What?
Draws you in right away.
Yeah. It's like the brand tells you everything about our narrative, the way we think and view the world. We're bold. We operate like a brutally honest brand that really is a humanized and authentic way of looking at things. We recognize how people actually have an ugly reality for the most part, and we empathize with it to start with. That connects, that creates human connection, and that takes out the noise of social media, everything, and makes people pay attention to what's important, because there's meaning to it. And that's the most important thing for us to start with and be able to connect. Then that creates trust, and people start to create a community around this, seen as a movement. And so we've created chats, groups in WhatsApp, in Telegram, and we have hundreds of thousands of messages of people. The most important thing is people helping each other, teaching each other how to do things. Of course, we have our own customer success team providing support 24/7, have a ton of tools helping people. But what's most interesting is that the community themselves are helping each other. And we are facilitating them and fostering that energy, that positive energy, because we believe that finance is a team sport. And it's something we want to provide, as I mentioned, like the connection, the tools, and facilitating this social component that provides what is needed for people to, thrive. And so that's the way that we believe that is the most effective way of truly making an impact at scale. It's certainly different from the way that the traditional fintech will do so. The way we talk, the way we our content on online, our marketing is a completely different thing. It's the only way, right? But it's by design.
That's got to be the best source of validation for you guys, where you have your own community teaching the new members, right? Educating the new members. And what you're doing is kind of pivoting back of we've taken the first step, educated our users, and now they're educating the new group. And right, we're just fostering and bringing the resources to everyone to make it available. Yeah, that's got to be it's very exciting to see that come to life, I'm sure.
It is. It is what gives us energy and motivation to see that happening. It's exactly because it tells us that people are connecting and are understanding, and this is creating this positive effect. That's how we believe money actually should work, right? It's just kind of like this interaction. It's just, ultimately it's a social phenomena that makes people interact with each other, and it's whether people teaching others how to do X, Y, Z, or actually helping each other. Hey, like it is starting to exchange, create business, whatever. It's kind of like this emerging property that we are facilitating, and that's the most important thing. And this is something that we're 12 months into our initial launch. It's really been relatively short amount of time. It's already been good. We've onboarded 350,000 people in these 50 countries, and it's already generating very good traction. But by looking at the way that this has been engaging in a social way, that's what is going to bring what's next for 2026, and we can touch more on that. But we're trying to foster more collaboration precisely because that's what we believe it's making a difference. And again, especially so in an increasingly AI world where now all of a sudden, like, information is going to be a commodity already. It's already a commodity. Like that's not what's valuable now. What's valuable now is to be able to have a connection and truth, authenticity, and all of that. We believe is going to be the most important thing going forward. So we want to foster it.
Yeah, capturing everyone's attention and holding it is paramount in today's marketplace, right? So you're already doing that with the name. I'll tell you that right now. As CFO of a crypto fintech company, I know you're wearing probably 30 different hats at any given point, but is there anything that stands out to you over your journey these past couple of years of challenges, success stories, lessons learned, things like that that you could share with our listeners?
Yeah, there's a ton for sure. And as you say, like in a startup, you're like as an entrepreneur, you have multiple hats, and but yeah, like there's two or three that are the main things that we've experienced as challenges and learnings. First one, and most crypto companies have faced this, but especially us as a US company, and in the middle of the last few years, we faced a lot of legal and compliance regulatory challenges that I'm sure you know well, the whole Operation Chokepoint 2.0. Like, we lived through all of that, and it created really a very significant challenge that made us had to, create all sorts of complexities. We had to create several different legal entities, a huge amount of, you know, burden to be able to comply with everything. And even in trying to do so, we wouldn't be able to even open a regular bank account. Like, who would have thought that a company is just unable to open a bank account just to operate? It's just crazy, right? Like, that is actually what we saw, and it made kind of a complete challenge for us. But it also brings, I think, the best of you, because it creates a lot of, it made us kind of like up our game, and it gave us resiliency. I think I think it has been a very important experience for the whole team, to be able to go through that, live the first-hand experience of being debanked, or not being able to open a bank. As all of those things have happened to us, and it's very complex, and you come out of that stronger, and that's a
100%.
very important thing, and that definitely would take with us. That's number one. Another one would be, like, it's incredible, like, operating in a crypto world. It's a super complex world because you have a multi-chain, ecosystem, multi-currency, and all of a sudden multiple wallets. Literally, we manage hundreds of wallets, not to mention user wallets, with hundreds of thousands of wallets. And so the liquidity management in that context gets super complex pretty fast, right? It's like liquidity everywhere, and you need to move liquidity from place A to place B. It's kind of like a network, yeah, that only grows and grows because we're also in the business of connecting the two worlds, right? The crypto world and the fintech and the fiat world. And that we work with partners, of course. And so it's an ecosystem of partners and wallets and chains and currencies that it just creates this network. That it's a very complex thing. It's dynamic, has a lot of different velocity, and you do that while flying and growing. And so it's a very interesting challenge. Certainly, as a CFO, the FinOps piece, let's say, it gets pretty interesting. Obviously, we need to use a lot of tools, technology, operating models to be able to manage that properly. But it's definitely an interesting challenge that I haven't seen anywhere else. And then maybe that ties also back to another one which is related, which is the crypto accounting challenge.
Mhm.
Because yes, like on that complexity, you need to make accounting and financial sense of it to be able to have good information and make good decisions and provide the board with the right level of visibility. And that's a very complex thing because, as we know, like ERPs, traditional accounting software is not prepared for that complexity. And that's why we are relying on subledgers, and we're trying to use all the type of tools and technology to make sense of all of these on-chain data, where you can't go to a blockchain and say, hey, Ethereum, I want to download my last month's bank statement and see my balances by account.
If you ever find someone to go talk to about that, let me know. I'd be curious.
Exactly. So it's like, nope. Yeah, I mean, here's the data. You have it there. It's online. You make sense of it. And it's like, okay, so we need to, yeah, we have worked a ton on, with that data engineering and subledgers and to be able to, yeah, put all that together. And it's been kind of like a work for months, but it's the way that, yeah, it's the new way that accounting is required for crypto companies, and to be able to provide the output that we're used to seeing in a very nice balance sheet and like P&L statement, etc. No? So
Well,
yeah.
it's interesting to make the parallel here because this topic particularly hits home in my realm here, working on the audit and accounting side of the house with crypto companies. But it's an interesting parallel in that the problem we're trying to solve in Bank the Unbanked and give them a solution in this new digital economy. Meanwhile, behind the scenes, we're trying to, right? I say we, but companies are trying to implement various software solutions to automate processes and make it as seamless as possible while making it as accurate as possible. Because I think you bring a good point up that when you have traditional tech companies, they're dealing with fiat only. Obviously, there's 1,000 problems. But when you add a crypto element into the neobank here, the fintech world, you're basically doubling all your efforts on the back end, where you have all the crypto solutions for customers with the fiat solutions, trying to manage that entire network, like you posed, while rolling that up into a reportable financial format, just to get a sense of where do we stand? What's our snapshot look like from a financial position? Yeah, it gets hairy very, very quickly. So I can understand and appreciate all the financial infrastructure and man hours that you've put in, your team has put in to get to that point, because I think it's ever growing problem for companies and trying to figure out what's that sweet spot, because I don't think there is a one solution fits all for a company, right? Everyone is unique and a little bit different in the marketplace of where they fit in, and there's going to be different softwares and automation tools that might work for one company that don't work for another. So it's kind of always finding that right balance and what fits your company.
Yeah, I think so. And I think this is evolving. I think as the industry continues to grow and mature, I think all of this will continue to kind of like be more and more standardized, hopefully, and we'll reach a point where kind of like there's a financial stack that is adequate for this type of crypto fintechs. I think we're on that journey, but it's the interesting thing is that we're kind of like learning on the go and kind of like building
Flying
together.
by the edge of your seat.
Yes, yes, and it's both interesting and challenging because I get to see from where I stand as a CFO. I'm obviously very close to the business, the CEO, to product, engineering, etc. But also kind of like have all the view of a back end, and it's like the tip of the iceberg. It's already chaotic and very dynamic, etc. But you haven't looked at what's below the iceberg. It's crazy. It's huge. It's complex. It's like and we spend hours and hours with the data and all of that and it definitely has been one of the most challenging efforts that I've experienced that I've been I have 25 years of professional experience but this is definitely the most challenging one but also the most interesting one because you get to build you get to kind of like a pioneer the
Hmm.
way that the whole industry evolves and actually working together with partnering with sub ledgers that are trying to provide these new software solutions to be able to make sense of all of these. It's actually very interesting. It also taps into the creator. You put your architecture hat and you co-design and create new processes, and that's something that I like as well. So it's interesting for sure.
You're building the future of the digital economy, right? What are the future of the payment rails, right? Bringing legacy financial technology that's been around forever and transitioning that to real-time settlement, real-time payments for individuals, corporations, and building that trust back for individuals holding their uh their their finances and their cash. So we touched on a lot of topics today. I want to end on really short question of what are you seeing your future vision, right? For the UglyCash, your customers, the products you're delivering next couple of years. Obviously, you touched on earlier, stable coins have been the hottest topic for the last 12 to 18 months. Every company, bank is looking to issue their own type of stable coin. So we're going to see more and more of this digital economy, the behind the scenes of how real-time settlement, because I think it's a must have in today's world. Gone are the days of waiting 4 to 5 business days for wires to settle. I think that's just so dated at this point. But I'm curious, what is your vision for 2026 and beyond look like?
Sure. So yeah, let me give you my rapid fire predictions or what do I expect in terms of key trends for the coming years and then just closing the ugly cash plans. So yeah, like for me, the key things that we're looking ahead, hard assets are going to continue to be important. Things like gold, things like Bitcoin, because of the reason that I mentioned in the beginning, to the extent that we continue with global debt levels expanding at the rate which is expanding I think there's these type of assets are going to be continued to use as a hedge, and that is something that I expect to continue to happen. We'll see, along with the tailwinds on that in terms of more regulation, more pro crypto administrations, and institutional adoption, corporate treasuries, etc., etc., etc. The second piece definitely is stablecoins, as you touched. For sure, I think it's going to continue to be super, super important, the adoption. I think even though we have seen already massive adoption, we're still, I think, in the early stage. I think we're probably already crossing the chasm or about to, but I think we're going to see a huge adoption in the coming couple of years for sure, because as institutions adopt it now more directly, banks, obviously networks, Visa, Mastercards are already there. It's just going to go up, and even other type of companies, retailers with embedded in finance and other type of use cases for reward programs, and it's just going to it just makes sense, right? Stablecoins is just faster, cheaper, better, right? And so like that is definitely going to be an important part. Then thirdly, I would say tokenized real world assets, like the tokenization of everything. I think that's what's ahead, as Larry Fink has said. So, like, I think everything is going to be tokenized over the next few. It's already happening, starting to happen, and it's just going to continue to accelerate. Eventually, everything will have a token representation on chain. If not, actually, at some point, we'll start to have native securities natively tokenized on chain instead of having some equity existing in the fiat world that has a synthetic wrapper version tokenized existing on the blockchain. I think at some point, if regulation allows it, that would be originally issued, the equity itself, the security itself, it's going to be originally issued on chain as a token. And that's where it becomes even more powerful. So I think that's coming, and it opens up a ton of opportunities, such as indexing those, as I mentioned, through the DTF type of products and others. It's going to democratize also access worldwide, not only in the US or in some places, but everywhere, if we do the job right, as at UglyCash or others. And also another one would be prediction markets. I think it's also already a thing, and it's going to continue to be a thing going forward. It's kind of like this interesting way of crowdsourcing expectations, like seeing how people think about certain things. And it's going to be interesting to see the dynamic, to what extent that becomes kind of like self-fulfilling prophecies or not. But anyways, I think it's going to continue to be widely adopted. And lastly, on-chain lending, I think it's going to be more and more important outside of just, certain specific crypto use cases. I think we're going to start to see more and more as all of these real world assets get tokenized. All of a sudden, that can be used as collateral for crypto backed, asset backed crypto loans. And so that creates a very interesting, different type of credit model on chain, which faces its own challenges of trust factors and credit scores and how do you do certain things. I think that creates an interesting possibility. And so, yeah, for me, those are the main things to look for ahead. And when it comes to UglyCash, we're doing great, and I think 2026 and beyond is just going to continue to be growth, scaling up. It's pretty much like we're expecting to potentially raise a Series A in 2026. And I think the next 2 or 3 years are going to be just pretty much going from Series A to Series B. So important milestones for us, for our company. It's just scaling up, developing growth and adoption everywhere, and bringing all these products. So I think, like, I don't want to spoil, but like there's something coming up pretty soon. It's going to be very, very excited about what we're bringing, and it's pretty much involves bringing pretty much all of it to everywhere, everyone, everywhere. And so it's going to be a very, very interesting, and it's going to also tap into this social component that we touched on, the community-driven type of dynamic. So we're enabling all of that in a single app to provide, true economic opportunity to everyone. And so that's what's coming for UglyCash in the future, and we're very, very excited about it.
That's a great teaser to leave with our audience of follow-ups and follow UglyCash. Two notes to hit on there really quickly that you wrapped up on. The tokenization component, I fully agree with. I think that has been a topic we've been talking about the potential of for years now, 5 or 6 years, and we're starting to see it come to life, which is great. I feel like it's been like this thing overarching the crypto community of that's the next step, tokenization, and what it can offer. And now we're seeing that come to life. And I think that's just going to continue to escalate as we roll into 2026. And that parlays right into the lending component that you mentioned. But I think one thing listeners should be cautious of and need to educate themselves on is the capabilities and complexities of what smart contracts offer, right? Because I think a lot of that will be rolled up into smart contract offerings when you think of on-chain lending, and what does that mean? How do they work and interact? And what does settlement look like for collateralization, like you mentioned? So as we move and pivot into a more technological world, just understanding the complexities, the challenges is we're all going to be transacting in these in the future. It's just a matter of how quickly. So I'm excited. Future's exciting up ahead. 2026 is going to be a great year. I know 2025 was huge for the crypto community. So Luis, thank you for joining us. This was very insightful. We learned a ton today. Where can listeners go to follow and learn more about you? Make sure they stay relevant on the upcoming news and drops that's going to be coming out for UglyCash.
Sure. So if people want to know more about our product, you can go to ugly.cash. And that's our website, and you can learn everything about the app and download it from there, etc. And if you want to learn a little bit more about me, you can go to my LinkedIn profile. You just search for my name, Luis Romero. And yeah, I'm happy to chat with everybody on these topics. It's great. I'm also on X, I think my handle is Luis Free Will, because I'm a free will believer and I'm a libertarian. So you can catch me there as well.
Awesome. Awesome. Well, appreciate the time today. As always, thank you for tuning in to Cryptonomics, and see you on the next episode.